if I had to ask you, are there any investors you admire whose specific traits you admire? Can you name 2, 3, if at all?
Okay, now this is the other thing. I am also against I mean, when you ask, and this is the way most people in the markets look at it, that so and so is successful, and what was their strategy, and therefore I must copy that strategy. First of all, I am also a person with the statistics background. This is the wrong question to ask. So the real question to ask is that of all the people who used this strategy, what was the outcome? So, for example, a very risky strategy where every year 95% of the people go bust, but the person who remains makes maybe 10 times the money. At the end of 5 years, you will find that hardly anybody is left, but whoever is left has made outsized money. But doesn't mean that following that strategy will get you there. So I have read a lot of investment literature, and you find insights here and there, and you incorporate some of them, but never swallow anyone's philosophy wholesale. First of all, many people don't even check whether what they think the investor is doing is the same thing as what that investor is doing. You look at the most well-known one, which is Warren Buffett. People think he just buys and holds, whereas he sells almost a majority of his holdings within 6 months or 2 years. That's the kind of time range. Of all the hundreds of decisions he has taken, he says only a dozen have accounted for all his excess returns. So again, you don't look at data, you ask the wrong questions, and also account for the fact that what time period, which market did that person make money. So, that like 80s and 90s were great times for the US market, and therefore that compounding showed up for anybody who made a reasonable bet on a certain, and during that time a certain type of companies again did well, but doesn't mean that that type of company will always do well. I mean, Ben Graham is the like the saint of value investors, but he made almost all his money in an insurance company, not in value stocks. So as I said, once you look at the data, it is different. But I mean, always, of course, feed your mind, understand your own mind. So one of the category of books I really would consider as like kind of a guru for me have been to do with understanding the fallacies of your own mind, whether it is Daniel Kahneman with Thinking Fast and Slow and Noise, or Richard Thaler's books, or there's a book called Invisible Gorilla, and many others like that. So once you have understood the numbers part properly, then also really it's very important to understand your own psychology and the pitfalls.
Oh, that's really interesting.